Alright, this is the third video on the first financial statement ever stated by the Financial Accounting Standards Board. And what we're going to be talking about here is the carrying value or book value of an asset. Alright, this one's real simple. An asset has an original value when you first buy it. When you first buy your power tool, when you first buy your robot that fixes up the cars, or you first buy yourself a car to do your transportation work, so on and so forth. Well, on a balance sheet you have to show first of all what you've actually paid for the car. Then you have to subtract for the fact that the car depreciates. In other words, you're using the car, so the car's value starts to drop. Then you have to account for amortization. Now this would be more like if you had a brand name and you were trying to show that it was devaluing because it was an old brand name and you're getting ready to introduce a new brand name, okay? So amortization doesn't have anything to do with a physical asset, alright, per se. And then on top of that you have to take into account the impairment cost. Now I talked about that in the previous video, and I told you that this impairment cost is when a book value, of course, is overstated, and so therefore you have to subtract a certain amount to show the overstatement of the value of an asset. Okay, and this is done periodically through the asset's life until finally it has no value at all and you put it in the trash can, and that's the end of it. Alright, so that's what's meant by a carrying value or a book value. Now this also works for liabilities, and I'll talk about that in a future video. When you're denominating something, it's what we call denominated. When you denominate something, what you're actually doing is you're stating something in some kind of a monetary term. Like you're actually stating the value of a car in dollars and cents. Okay? And that's what you mean by denominated. You're denominating something in a foreign in a current whatever value, whether it be in U.S. dollars, British pounds, whatever. You're actually saying that the value of so-and-so item is so-and-so dollars and cents. And this can be done in British pounds, Japanese yen, you name it. That's how it can be done. Alright, I will continue to talk about this statement in a future video, so stay tuned.